Good morning, everybody, and welcome to this webinar today, a webinar about connecting European sustainable finance to standardization. As usual, my name is Els, and I will be moderating this webinar in the background. I am Project Manager Engagement at Sensenelec, and I would like to just remind you about the housekeeping rules of our webinars. So you are by default all muted during the webinar, but I invite you to use the Q&A panel to submit your questions. So you will see that we have several speakers. We will try to have a small pause after every presentation to get back to your questions and possibly answer them right away. Should your question remain unreplied, please do not worry, because we intend to create a small Q&A report that has all the questions integrated in the file that we will make available via our website. Should you be on Twitter, please talk about the training with the hashtag training for standards, and you can find us via our handle at Standards for EU. Now, I have the pleasure to introduce you the four speakers of today, gently separated in between female and male, let's say. So we have Bettina Kretschmer from the European Commission, working there as a socio-economic analyst. My colleague Andrea Nam, who is project manager, energy and living at Sensenelec. We have Mr. Franz Knecht, a finance sector expert and active in several TCs at ISO level. And Mr. Ettore Piantoni, Vice Chair of the Sector Forum Energy Management and also Chair of the Sensenelec Joint TC 14 that he will talk about later on. So please let me ask my colleague Andrea to open the floor, introducing you and tell you a bit more about European standardization. Please, Andrea, the floor is yours.
Thank you very much, Els, and thank you everybody for joining this webinar. This is a very interesting subject, and we would like for the first time to present how standards can support sustainable financing. So next slide, please. Yeah, so since not everybody who registered to this webinar was knowledgeable about standards or not coming from the standardization community, we decided to give a very brief introduction on what European standards is and who are the standardization organizations. So we have three standard organizations in Europe recognized by European law, the regulation you can see below. SEN, the European Committee for Standardization, CENELEC, the European Committee for Electrotechnical Standardization, and ETSI, the European Telecommunication Standard Institute. Today, we'll focus on the first two ones. Next slide, please. The network of SEN CENELEC is very broad. It connects more than 200,000 experts. Who are these? We have 34 national members. We have European organizations who participate in this work, associations, federations of businesses, consumers, environmental societal stakeholders. And of course, we have institutions and governmental bodies, including the European Commission, the European Free Trade Association, and we have affiliates, the national standard bodies and countries which are cooperating with the European Union. And also, last but not least, significant international cooperation, most particularly with ISO, IEC, but also with regions and countries outside the European Union and EFTA. Next slide, please. So standardization happens at different levels. You can see on the left side our members logos at national level. They're developing national standards which can become European standards, and the objective is that they become international standards. Next slide, please. But what is a standard? A standard is a technical document presenting the state of the art and is designed to be used as a rule, a guideline, a definition, which is produced by all interested parties in a transparent, open and consensus-based process. And it's intended for a common and repeated use. And it's voluntary and approved by the recognized body. But also it can be used to underpin legislation, to support the legislation implementation. On the right side, you can see the front page of a standard, how it looks like a European standard. Next slide, please. So it's very important regarding the European standards, the so-called harmonization effect. What is this? This is what makes European standards very unique, because one European standard, when it's adopted, then all national standard bodies or our national members adopt identical national standards, and all conflicting standards are removed, which means That this gives access to 600 million consumers. Next slide, please. Just go through the whole. Yeah, so basically, as I mentioned before, it's very important. Standardization is happening at different levels. Click a bit more else, please. So we see the arrows. So at national level, it can move up to European level, and from European level can move up to international level, which is our objective, basically. But national standards can also directly become international standards, depending what the starting point is of the standard development. So we are at international have a so-called Vienna agreement with ISO and the Frankfurt agreement with IEC, the international standard organizations. And the principal objective is to have identical European and international standards. So what is the situation now is CEN has over 30% of its portfolio identical to ISO and standards, and CENELEC is close to 80%, so it's a much higher percentage. Next slide, please. Thank you. So the standards basically are there to remove trade barriers, to facilitate trade. So European standards apply across Europe. So as you can see, you need just one standard and you can pass, your product can pass. And if they become international, this means that your product can circulate more freely in international markets worldwide. Next slide, please. So why are the standards the best market and policy tools? Because they have a key role for the competitiveness of the European industry, because they are business-led and they are market-driven. And standards also support the implementation of the European policies and legislation, as I mentioned before. And they also build trust and market access because they are recognized by businesses, but also by regulators. And as I mentioned several times before, they have obviously strong international dimensions through the international standard organizations. Next slide, please. But now let's move to sustainable finance. What is sustainable finance? It is the integration of the environmental, social, and governance criteria into the investment decisions of the finance sector. What is the objective of it? It is that the investments from now on support sustainable growth and the transition to climate neutral economy. So what is the role of society here is to call upon the financial sector to contribute to sustainable finance. And what are the regulators and authorities doing? They elaborate requirements which financial institutions will have to comply. And the standards, they would like to serve as a reliable tool for connecting the finance sector needs with the business investment needs. Next slide, please. So standardization intends to support the sustainable finance objectives. So standards are developed in this field. They are in Europe mainly followed up and coordinated by the Strategic Advisory Body on Environment and the Sector Forum Energy Management and Energy Transition, and obviously various technical committees. The sustainability related aspects of the sustainable finance are the standardization part is done mainly at international level, but with significant European lead. And the energy related aspects are already also started to be covered at European level. And the main actor in this is the CEN-CENELEC joint TC14 energy management and energy efficiency framework in the energy of the energy transition. So in the following slides, my colleagues will present, Bettina will talk about the taxonomy, so the policy framework and the sustainable finance action plan. Franz will present the market, what the market is, what standards the market is interested at European and international level, and who are the players and the drivers of this. And then Ettore will also present how standards contribute to sustainable finance with concrete examples and also some suggestions for the way forward. So Bettina, please, floor is yours.
Yeah, good morning. Thank you for this introduction. I had seen there was already a hand raised, but I don't know whether that's at that moment or maybe not. Okay,
well,
I'll just
we
continue.
kindly ask the attendees to enter their question in the Q&A panel because we're more than 100 persons connected. So please, if you can just write down your question in the Q&A panel, then we can have a look later. Thank you.
Cool. All right, yeah. As mentioned by Andrea, I will give a short introduction. I was asked to give a short introduction about the work of the European Commission in the area of sustainable finance. My name is Bettina Kretschmer. I'm working for DG Environment at the European Commission in a unit that deals with green finance, sustainable development goals, and economic analysis. So we are working very closely on this file with several colleagues, actually a pretty large group of colleagues across the Commission. The lead DG for the sustainable finance file in the Commission is DG FISMA. But yeah, apart from DG Environment, also DG Klima, DG Energy are very closely involved, and a range of other DGs. If you go to the next slide, please. Thank you. So in 2018, maybe a lot of you are aware about this. The Commission published the first ever European Action Plan on financing sustainable growth. It put forward 10 actions in 3 broad areas. So putting forward 3 objectives. The first of one, Andrea alluded to it before. Why are we talking about green finance? Well, we want to reorient capital flows in order to move us to a more sustainable economy over time. We have put forward actions to mainstream sustainability into risk management and to increase transparency on financial markets and foster a more long-term approach in financial markets in order to ensure that sustainability risks that are also very often long-term are factored into investment decisions. Next slide, please. So the Commission, as I said, put forward basically 10 actions under those sort of 3 broad headings. I'm not going to go through all of them in detail, but maybe to mention a few of them that I will talk about in a bit more detail afterwards. Action number 1 was to develop an EU sustainable finance taxonomy. The idea being to basically put forward a list of economic activities that are considered environmentally sustainable. The aim of the taxonomy was to be really a transparency tool, and also it was considered necessary to have such a definition of what are environmentally sustainable economic activities as a basis for further actions. For instance, in the area of green bond standards, sustainable finance labels, just to name a few of those other actions here. Maybe another one to mention is work that has been done in order to increase transparency on financial markets by requiring certain disclosures from financial market participants. This is action 7 here on this slide. This has led to the adoption of the Sustainable Finance Disclosure Regulation at the end of 2019. Other actions are really sort of set along the investment chain, so incorporating sustainability into financial advice, developing sustainability benchmarks, working on sustainability research and rating agencies. And another important one, in order for financial market participants to make disclosures about the sustainability of their investments, they of course need information from companies. So this is action 9 here, to strengthen the sustainability disclosures by non-financial companies as well, in order to have this information flowing through the investment chain, so to say. Next one, please. So in a bit more depth on the EU taxonomy, this is being talked about a lot these days, so I think it is timely to speak about that. As I mentioned, the taxonomy is really foreseen as a classification tool to give guidance to the market on what is considered a green economic activity. The idea being that this would also protect investors and reduce the risk of greenwashing in the market, because without having a taxonomy, basically there can be green financial products on the market with the label green, but without necessarily a lot of information on what green in that context actually means and how green it really is. So the taxonomy was devised as giving that enhanced certainty and transparency. And in doing so, really to contribute to that first objective of reorienting capital flows. The taxonomy is built around 6 environmental objectives that are enshrined in the regulation that was adopted in 2020 last year. 2 objectives in the area of climate change mitigation and adaptation. This is what we are currently working on in a lot of detail. We are foreseeing the adoption of a first delegated act containing technical screening criteria in order to determine under which conditions an economic activity makes a substantial contribution to climate change objectives. We are anticipating the adoption of those technical screening criteria for tomorrow. The other 4 environmental objectives, and this is very much something that I and colleagues are working on in DG Environment now, again, together in this broader group of DGs, are the 4 other environmental objectives on water, pollution prevention and control, circular economy, and biodiversity and ecosystems. Here, technical screening criteria are still under development for adoption in a second delegated act. Next slide, please. The Taxonomy Regulation has set out those 6 environmental objectives, but it has also set out the broad conditions that an economic activity needs to meet in order to be considered environmentally sustainable. So these conditions are basically, it needs to make a substantial contribution to at least one of the 6 environmental objectives that I've referred to before on the previous slide. It needs to comply with the do no significant harm criteria to the other environmental objectives. So the logic here is that we do not want to solve one environmental issue by creating problems elsewhere. And it needs to comply with minimum social safeguards. These are, making reference to international human rights and labor laws, and are set out in Article 18 of the regulation. Really the key features of the taxonomy and the technical screening criteria that the Commission has been working on over those past years, also with the help of experts very much, is that they are science-based. In order to determine what makes a substantial contribution to a given environmental objective, we need to consult the science, what the science says, and what are, for example, the transition pathways for certain economic sectors. It builds on existing work on, existing EU legislation, but maybe also standards come in that area. It's meant to be dynamic. We are adopting the criteria through delegated acts so that we are also able to review them over time. And that is important because the science moves on. What is considered say a low carbon mode of transport currently might not be a low carbon mode of transport in 10 years time. So these criteria need to evolve over time. And they should be easy to use so that they actually, give that added value of increased transparency to the market. Next slide, please. Now, who actually has to make use of the taxonomy regulation? We can distinguish between 3 groups of users. On the one hand, it's financial market participants who are putting on the on the market financial products in the EU. They need to disclose how and to what extent the taxonomy was used in determining the sustainability of the underlying investments, to which environmental objective their investments contribute to, and in some cases then the proportion of underlying investments that are taxonomy aligned as a percentage of the total investment. Here it's maybe worth noting that basically the taxonomy regulation is a sort of add-on, and it formally amends the Sustainable Finance Disclosure Regulation. Larger companies that are under the scope of the Non-Financial Reporting Directive need to disclose the proportion of turnover of their activities that are aligned with the taxonomy. And finally, member states and the EU itself, when setting out measures to promote green finance, such as labels, green bond standards, should refer to the taxonomy. Next slide, please. Yeah, of course, the action plan is already 3 years old at this moment. 2018 was a slightly different setting. The challenges that are posed by environmental degradation are obviously not decreasing, but rather intensifying, which means that also our policy response needs to accelerate and intensify. Next to that, we have had the COVID-19 pandemic and the need to recover in a way that is future-proof. So the Commission is currently working on a renewed sustainable finance strategy, which will build on the 2018 action plan, but aims to, to be a more comprehensive set of actions and more ambitious. The plan to adopt that new strategy is for June this year, so in 2 months' time. And yeah, it will, look into a wider set of actors, including an increased focus on the real economy and corporates, public authorities and citizens, to give everyone really the necessary tool to be part of that transition that is required. Next slide, please. Now I've talked a bit about the taxonomy. I want to touch upon two other strands of work that are of very much interest, I think, in the public. So first of all, there's work ongoing on a EU green bond standard. The Commission will adopt a legislative proposal to that end by, again, June 2021. We have had the advice from an expert group, the Technical Expert Group on Sustainable Finance, which has also advised us on the technical screening criteria for the taxonomy. They have come forward with a report on what an EU green bond standard should look like. The core components are basically it needs to align with the EU taxonomy. There should be a green bond framework that explains the investment strategy and the alignment with the taxonomy. There should be mandatory reporting, including ex post reporting or impact reporting, and mandatory verification by external reviewers. Now, what the Commission is looking at is proposal of a green bond standard that would mirror rather closely the key recommendations here from the TEG, with, emphasis on the need to pre and post issuance reporting, accreditation of external verifiers, impact reporting at least once, possibly annually. So these are the sort of the elements that we are looking at, and for publication a bit later, before summer. Next slide, please. Yeah, and another piece of work where we are actually adopting, the Commission will adopt a proposal tomorrow together with the delegated acts under the Taxonomy Regulation, is the review of the non-financial reporting directive. Again, the technical expert group has looked into that directive and has made certain recommendations on spelling out some of its provisions or giving enhanced guidance. The directive was also subject to a fitness check lately, and over time it has become clear that there are certain issues with that directive. This relates to some companies not really reporting the right information, or no information at all. Companies not really reporting what is considered the most relevant information. Information from companies are not necessarily comparable, not always very reliable. Also, there are problems related to accessibility and usability of that information, such as not being available in digital format. In other words, the needs of the financial market participant in having, comparable and high quality data from companies on sustainability issues are not met. And of course, the requirements for such data have only increased recently with the Taxonomy Regulation, with the Sustainable Finance Disclosure Regulation. At the same time, there are also problems for the preparers of those reports, so for the companies that need to report on those issues, who are not always clear about what to report, that are also sort of, facing pressure from various sides on needing additional information apart from what has already been disclosed at the non-financial statement. So there is really clearly an attempt here that to propose something much more standardized in the future in order to have more comparable and better information. Yeah. Next slide. And finally, just a very quick outlook on the sort of more international dimension of sustainable finance. Of course, the EU is very much trying to work mobilize international investments in order to help us achieve the objectives that we have put forward as part of our European Green Deal. In order to mobilize international investors, we are working with countries across the globe and have set up an international platform on sustainable finance to foster cooperation on sustainable finance policy, possibly to have some convergence of standards, of policies over time, given that financial markets are very much globalized, very much international. The Commission considered it necessary to also have some sort of coordinated approach in that area. So yeah, you see there are a number of members who have currently signed up. The platform is still growing. The members together represent around 50% of global greenhouse gas emissions, 45% of global GDP, and 50% of the world population currently. Yeah, maybe just before we go to the next speaker, maybe just a final word on the link to standards. I mean, I alluded to it before. When we develop the criteria, notably for the taxonomy that are going to be adopted in the delegated acts, in some cases, for instance, we are making reference to ISO standards, because of course, these are accepted in the market, and therefore they are useful tools in order to translate what we have in our legislation to, criteria that are easy to use for economic operators on the ground. So I think that is something that is very valuable in that respect, and that I just wanted to mention also given the context of the webinar today. Thank you.
Yes, thank you very much, Bettina, for this enlightening overview. I would like to immediately hand over the floor to Franz Knecht, because we might run out of time. We have some questions already appearing in the Q&A, so if you can take maybe a moment and have a look at them. Should you be able to reply them right away, please go ahead. If not, we can come back to them later on. So please, Franz, the floor is yours.
Thank you. The introduction was well done. We run out of time. Many questions relate to that we might run out of time by looking at certain parts of the finance sector and leaving out others, or not looking at SMEs, and how does all relate to the real economy, which is a discussion. Next slide, please. What I try to do is to show you a little bit the field, a bit. That's my personal perception. So we have players and drivers. When you go on the bottom, we have those proposing financial products and services and integrating from a supply side interest, sustainability issues into products and services. That has lasted now for 30 years, from very, very, very small solutions on green funds to an overall and even exciting or frightening conundrum of products and services of suppliers that were up to 2 years ago totally black and suddenly are green. Coincidence with names are pure coincidence. So I think we have to accept that the whole financial system is driven by two things. And this is the vertical financial products and service providers, and of course, investors who request these services or accept them. So when we look what the one provides today is a real widespread of services and products. And of course, all what is related to asset management creates a lot of earning possibilities. What is related to loans is more critical and more difficult to deal with because the risk is in the books. In asset management, the finance service sector hasn't the risk in the books often, not always, not. So investors' requests are the main issues, fair enough. It's about managing risks. Is it climate risks today related to this buzzword stranded assets? We are not discussing this now, but this is something which is understood. And then we have more and more investors saying, well, I want to see that my investments are aligned with sustainable development goals, however they can be grasped or described reasonably, or key performance indicators are out there, but probably not understood by everyone in the same way. And then we have the whole area of financial innovation, where investors are looking for what are the opportunities for me to combine things which the finance sector develops. And I refer here to sustainable financial technology, fintech developments you might be aware of. Now, this is the vertical, supply and demand. The horizontal is regulation, whether it's hard law or soft law. From the left, we have regulatory dynamics, and I take just out these examples by the European Union. And as a Swiss, I might do this happily because we are not in the European Union, but we are midst in the European Union, and we contribute to it in many ways, in high numbers as well in financial terms. But nevertheless, regulatory dynamics for Europeans are based on what happens in the European Union. Fair enough. So we have different things. We have corporate non-financial disclosure requirements coming up. Taxonomy was described. Sustainable financial disclosure relates to the finance sector disclosure requirements. And on the right-hand side, we have that, what we're talking here about, standards and standardization. I have to say here that there are a lot of standards or guidance done by finance sector over the last years coming up, but are they always standards and have they the quality? That's not the question. Nevertheless, we have management standards in ISO, we have monetization standards, we have cost and benefit standards, and we have other things coming up, even on the broader sense of sustainable development, integrating into organizational products and services. So next slide, please. So what is it out there available? Again, what do we have and where are we aiming at probably? Maybe I'm challenging you here a little bit. You see, we started with the nice to have, and we still base a lot on that, which is good practice guidance. We need that. And this is very practical for the finance markets participants, whether on the buy side or the sell side, whether you need money, whether you provide it. We have global reporting initiative, we have UNEP finance initiative proposals for that. And then we have those which developed over the last 5 to 10 years very much, and that's the need to know. Green principles on bonds, loans, the TCFD requirements or recommendations, SASB as a standard, as a body who comes up with accounting standards. These provide frameworks with recommendations, and which means they are recommendations, and they enter the law. For example, TCFD enters the law of a lot of countries, but is not yet there, but we need to know. Now, what is really needed today to really dynamize it? It's the must comply with type of standards. And this can be legal aspects presented by the European Union, by Bettina just before, or they are so-called hardwired standards with requirements, because a hardwired standard, as I use this term, it's not an official ISO term, is providing the details that you can have a good assurance and verification process, whether internally and better externally, to really create credibility. Because what is needed is efficient financial value chain, and efficient financial value chain is first of all based on the trust of the participants. And then of course also on the usability of the tools. Next slide, please. So ISO did in its technical committee 322 sustainable finance and evaluation of initiatives out there. These many initiatives I addressed, and we came up with an evaluation of 122 globally active sustainable finance initiatives, which means initiatives and organizations. We said we look at sustainable finance particularly. And what came out was interesting. Where is a high consensus? What is a primary focus of these initiatives? And what is even absent? So we have a transparency and disclosure strong focus, primary focus by multilateral organizations. What is a multilateral organizations in this context? ISO is one, so composed of many organizations around the world, not also business, also government, also research and development. So all together, ISO is such an example. Industry describes the finance sector industry, so not the manufacturing industry consensus. Government is government-led initiatives. The tag, for example, is a government-led initiative group or expert group. And then we have NGOs and research. So here you see transparency, disclosure needs, and focus is high. Well, not surprisingly, because credibility comes from transparency and disclosure. The next one is, well, assurance and verification. How can we make bulletproof the transparency and disclosure aspects? Here again, a strong primary and a strong secondary focus of these initiatives. But you see here a larger absence of certain stakeholder initiatives. Finance sector is not so much focusing on that, others are more. Then we have, as more interesting because it goes into this KPI discussion and scientific impact assessment tools, it's the impact assessment area. Here, primary focus, secondary focus is strongly present. And the last one is most interesting from a standpoint as ISO. So least required or addressed is the stewardship, which means stewardship is this overarching management quality standardization issues of initiatives, or looking at that. So means we might have enough stewardship, but we don't have enough transparency and disclosure, assurance and verification, impact and assessment. That's where ISO is at the moment in its technical committee 322, focusing and saying, well, what can we provide as ISO 322 sustainable finance is overarching all other ISO technical committees that deal with 207, for example, environment management, or 309, governance of organizations, and others with sustainability related topics. Next slide. So standards by ISO and CEN are trying to bring things together now much more. Of course, we have management performance in sustainable development being tackled in many ways in different technical committees existing for quite some time. 207 environmental management, systems, evaluation, life cycle analysis, climate risk, climate issues. We have governance of organizations 309. We have new, now for 2 years, 322 sustainable finance. And we have also very new circular economy. And we have the newest one, biodiversity. So all this needs now to be embraced in a very good way. Not to do piecemeal, but bringing things together and using dynamics and solutions for the practitioners. Enhanced coordination liaison will happen then, of course, with also technical committees which exist in ISO. This famous technical committee 68 financial services, which exists for 30 years or 40 years even, and deals mainly up to now with technical aspects like readability of information or numbering and things like that. So practical things, very essential for the finance sector, but not understood outside very much. We have another one, 251 asset management, who is looking up to now more to fixed assets, and now is also opening more up and the relevance of financial assets. And then we have the joint committee, TC14, energy management and energy efficiency in the framework of the transition, which is trying to and entering this debate as well. Next slide. So I propose you shortly to have a look at two standards which deal with monetization or cost and benefits. I don't go into the details very much, except There is one 14007 existing now since 2019, a guidelines for determining environment costs and benefits, internalized and externalized, quantitatively or qualitatively. And when it is quantitatively, it can be non-monetarized or monetarized. And the main elements of this standard is how do you determine your evaluation? What can you apply here and how to use this? And part of this 14007 guidelines is the standard 14008 monetary evaluation. So you see the quantitatively non-monetary or monetized user value is here broken down into what can ever be monetized today with different economic approaches. And these approaches are market proxy, price proxies, revealed preference methods, stated preference methods, value transfer, equity weighting, discounting, analysis of uncertainty and sensitivity can all be brought in, and it gives you a very, very sound basis if you want to say, well, what is, for example, my climate impact in a much more embracing a holistic way, and not just looking at CO2 emission pricing or impact of stranded assets. It can be also the impact of health and other aspects which can be assessed here. And we have my colleague who is the convener of 1408, Bengt Steen from Chalmers, and we have made a case that can be loaded down via the ISO website. Next slide, please. Two very prominent right now are those that will be finished this year. Green bond standard was addressed by Bettina already on the European level. So we started with the green debt instrument standard group already in 2016, 2017, before the taxonomy discussion came up, and then had to split up, because the difference between this standard and the European standard is this standard allows the market participants to address either the proposed standard part 3 of ISO in this series of standards which are connected, or to say, well, I use the European standard for taxonomy, or another one in another country that exists, or I create even my own logic. What is the eligibility of projects, assets, or activities I want to finance with a green bond or with green loans? I don't go into the details, but you see here green bonds, green loans. Green loan is point-to-point connection between the borrower and the lender. Green bond is a little bit more complex because the capital markets are more involved in that, and you have actually 3 players. But all this has one aim, that is giving a strong signal to the market you can do it, and credibility. The other one, ISO 14097, the framework, is an even more is also a very interesting one, but on a completely different level. It tries to guide the user to show how does his climate policy or climate objectives he actively integrates into his investment policy. What does it bring out? And you know, below you see this picture. You have as an investor an objective. You have a climate action, which means what do I do in addressing an investee, the one who gets my money? What is the output I look at, and what are the outcomes I want to evaluate? And that gives the impact I create as an investor in this context. And I think that's it's a very complex standard. It can be verified, by the way, like 14,030. So you can get a stamp, but it is really that what we are all looking here. Where is the beef? What is really the outcome of all these measures? Is it just moving money around and clearing and saying it's now suddenly green because we finance solar panels, but it impacts on other issues? Bettina spoke about that. the do no significant harm aspect and social safeguards. But this is giving a very, very deep insight into that. And it is what we need probably also to look at. I think that was my last slide. And I thank you for your attention.
Yes, thank you very much, Franz. I feel you're very passionate about the topic and you could continue for hours on this. But without further ado, I'd like to ask Ettore to continue. We still have 15 minutes for your presentation. Please, in the meanwhile, if you see questions that you can reply, Franz or Bettina or Andrea, please go ahead. And afterwards, we have a look at the non-replied questions. So for the attendees, if your question remains unreplied even during this live webinar, please note that we will create a Q&A report that will be shared with you soon. So please, Ettore, the floor is yours.
Okay, good morning, everyone, ladies and gentlemen. Well, we will go through a series of topics right now, starting from what our colleagues told us about. So if the policymakers are telling the why, the what, the when, the who, standard tend to reply to how to do it. And it's a voluntary basis, but they are recognized as the best practice available to date. And the how to do it is where the risk is generated and when the value is generated. And that's the key important role of the standards. Well, in the past year, the climate change have made clear the business imperative of taking actions to manage benefits and the risk of the energy transitions. You see here our objective to the 2020, and while we are counting the shortcoming of these actions that we took so far, we are addressing and setting the new targets and aiming for a 55% reduction greenhouse emissions in 1 decade. And we will become the first climate neutral continent by 2050. We are living in a fast forward world where many things are happening at the same times. And the EU executive is due to publish tomorrow the first section of Sustainable Finance Taxonomy. This is a list of economic activities and specific metrics and relative thresholds that they must meet to be labeled as green investment within the EU. We have also some other recent development, taxonomy, as we mentioned before, the non-financial directive, non-financial related directive. And this all suggests that we need to integrate energy, environment, and the metrics related to the energy, the environment into business, financial reporting and disclosures. In this year, the EU leaders will have agreed to the largest short-term budget. We have 1.1 trillion euros, of which 30% will be dedicated to climate streaming. The recovery plan is amounting to 672 billion euros, and at least 30% must be dedicated to the green recovery. This is sum up to 1 trillion euros. And indeed, we need to invest the money on the most relevant project and to make sure that the how to do things will deliver the final results. If you look at the latest report from the EFRAG, the European Financial Reporting Advisory Group, the task force, identified that the standards in Europe are monitored by Sensenelec and ETSI, and they are the ones that are providing always on voluntary basis with the best practice. And the same document indicate for the financial view that there will be 3 levels of standards. There will be, the next slide, there will be one standard that is, one level that is standard sector agnostics, one that is sector specific, and the third level that is entity specific. And can this existing performance and technical standard meet with this requirement and the indication of the EFRAG report? Next slide, and the answer is yes. If we look at the highest level, at the sector agnostic level, so the management standard. Those are the family of standards that are already available today. And the EN ISO standard, it means that those standards are already complying with European needs. The other mentioned as ISO are international standards. And you see for any of them, you have a series of standards or detailed standards that are complementing those themes, that are those subjects that are described by the ISO family. If you go scroll to the next slides, you will see all the major standards that are available already. And if you look at the energy management standards today, I will attract your attention to something that is, to me, very fundamental. Previous one. Yeah, we have general methods, a standard that is indicating general methods for predicting energy saving. This is the ex ante and ex post evaluation of the result of a certain action. Is having energy impact and is having environmental impact. And then you have calculation and reporting on energy savings. Those are our key elements to identify the effect of the measures of the action that you are implementing and to quantify the metrics, the change in the metrics, the kilowatt hours that you are saving or the tons of CO2 that are saving. And these are fundamental to translate it then into euros, into economic value, because unless you have these changes in metrics, you do not generate any value. That's key. It all starts with something that is measured or that is anticipated, that it is identified that a certain action will change the effect of the energy consumption or the CO2 emission, and then you will go and measure the results. Next slide. Of course, we can have on the similar subtopics as before, if you go the lower level, yeah, I just remember you that we can go down to the eco-design and eco-labeling of equipment. So the standards are covering all the levels that are identified by the IFRAG. Where we are working today, you see on the energy management, on the ISO side, and on the Sense Analytics side, I will attract your attention on a couple of recent developments. The new standard ISO 50005 that is specifically managed and specifically addressed to small and medium enterprises, to take them stage by stage to implement an energy management system and to get all the benefits that maybe larger company can do it in one go. For them, there is a special attention because they don't have the resources, the competence, but we need to build up, to transfer knowledge and to build up their capacity, the capacity for them to address these issues. The second one is the 5506 is a revision of an existing one. It is evaluating energy performance based on baselines and energy performance indicators. Again, you address what are the metrics, and the connection with the taxonomy is evident. That starting with the metrics ex ante and then post, you identify if you can comply with the requirements and the thresholds defined by the taxonomy. Concerning the Sense Analytics side, we are working on the revision of the energy audit, on the how to calculate the evaluation of energy-related investment is valid for energy efficiency project as well as renewable, the project that are using renewable energy. We are working on energy performance contracting, how to guarantee the results. And this is also a good news for the financial institutions because you are guaranteeing the result of the action that you are undertaking. And there is one that is responsible end-to-end of achieving the result, being energetic results or environmental results. And then we are working on the guarantee of origin. This is an existing standard developed for the electricity, and now the European Commission asked us to extend this standard to consider also hydrocarbon, hydrogen, hydrocarbon gases, heating and cooling. And this is relevant for the future market of the guarantee of origin of the fuels. We have other initiative. If you look at the energy, at the energy efficiency principle, now within the EFI group, the Energy Efficiency Financial Institution group, there is, we are addressing the need of import to include, to embed the energy efficiency first principle guidance on financial institutions. If you can click, yes, thank you. So we set some objectives. We need to have to build capacity building for the developers, banks, and asset owners to understand how to embed the energy efficiency principle into financial lending. We need to address the need of stranded assets. This is going to be probably one of the key elements that we need to address, because so far nobody in the financial institution addressed the risk of stranded assets. And this is more important now with all the indication of the taxonomy. And then this group will identify what are the measures of, and consequently define the measure. There will be the need maybe to develop new standards that are addressing how to do, how to implement these measures. I'm repeating, the policymaker tell the how, the when, the standard tells you the how to do things and how to counter that. If we turn back to one of the results of the EFRAG report that has been published in February, the next slide, you will see the benefits of the taxonomy, or the financial institution and banking authority expect from the benefit from the taxonomy, and all the recommendations that are proposing. The next one. And does the standard has anything to do with it? If you look at the recommendation, you see that there are a lot of standards in it. We need to, if you can click else, there are, they need consistency and compatibility and comparability. And as we said before, also from Bettina, transparency is a key requirements. And then the how to do it of standards that will apply to it. We need to have a global alignment of taxonomy. Again, the standard is international. We saw before that it's covering 600 million of consumers in Europe. Then we have handling of data. That's also, and developing tools to handle this data. Again, this is the integration of energy-related aspect with blockchain and all this digitalization of energy. And then for the owners of standard and framework, they need to clarify the alignment with the EU taxonomies. You see how the financial needs and the performance need of standards are getting together. Today, we are not there yet, in the sense we are not working together or close enough to work together. But the need to join resources is already there. And I'd like to address one of the key important issues, that while the risks are multiplicative, so the risk on one step, it multiplies with the risk of the next that is following. So the total risk is related to the risk of the riskier actions. The benefits sum up. So we need to consider very closely that we need to manage the risk and the benefits at the same time. What all this, then, sorry, there is another important report that has been done by the European Central Bank, where they were estimating the climate stress test for 2,000 banks, and they identified the risk, the climate risk of, in the future, in the, let me say, in the time frame 2030, 2050, identify that the probability of defaults is growing in an unacceptable way if we don't do something. If we don't take action, if we don't address the risk now, then the risk for financial institutions is going to be much greater due to the climate risk that they have to address. And these are another important action that we need to consider for the future. Next one. Again, what is common to all the elements that we discussed so far is materiality, is the double materiality as defined by European Commission, and materiality can be applied to any issues, and essentially is, let me say, is the concept that any information, you need to provide information in the complete and transparent way that if you misstate or obscuring it, you can reasonably expect to influence the decision of the user of these informations. So the materiality means that you need to provide reliable information, transparent information, because the other organization along the value chain will take this information for granted, and they will build their own assessment to take the decision. This double materiality is sufficient, but it's not enough. We many times in this presentation we were commenting dynamic. These elements are not static; they keep on moving, and something that is maybe assessed today as sustainable is maybe changing this qualification in the future. Metrics and thresholds, they will vary in the future. So that's important that we also look at the dynamic materiality, the next slide, that we keep on moving along the development of those issues of sustainability. Then what, if we can summarize, what is needed? We need better data to make cost-effective decisions for the risk and the multiple benefits. We need this integrated framework. So when we provide the KPIs as a producer of standard for performance standards, those numbers or those elements are used by the financial institutions and by financial accounting for reporting and disclosure. There is a continuous, and we shouldn't have any missing dots or gaps. And therefore, the transition to a greater economy requires performance standards that manage risk and materialize the benefits. And this is will take me to the my recommendation, my suggestions, that if we look forward, the next line, a possible way to go forward is really to work together, the next one, where the European Commission, all the stakeholders that are participating in this element of sustainable finance, so from the European Commission, banking authorities, accounting standards, digital standard setting, we will have the digital energy, blockchain, and distributed ledger that is going to come and help us in addressing these needs. Standardization bodies and sustainability standard setting, they need to work together to have a common framework that is addressing the need of the consumer, of the industry, and the smaller and medium enterprises, because they may need different tools and different aspects. So that's a proposal that we'd like to launch. And if you may agree with this proposal, your contact person is going to be Andrea Nam to collect your input and your information. So what is needed? It is in my presentation, maybe we can summarize it in a few takeaways. Performance standards turn matrix value into economic value. So performance indicators are the link to the cash flow. And from the cash flow, all the financial institutions, banks, they will do all their assessment to evaluate the viability of the project. To scale up our ambitions, we need to work on integrated framework that doesn't have any gap between one step to the other. And well, this working group will help to address these issues and probably find a solution for all of them. Thank you.
Thank you very much, Ettore, for this passionate presentation again. I think I would like to hand over the floor again to Andrea for the key takeaways of this presentation. I would also like already to tell the attendees that we will not take any additional questions because we already passed the 11 o'clock. At Sensenelec, we try to keep the timing as precise as possible. So as promised, we will make a Q&A report of these questions. We've noted down them very well. So we will come back to you later with that. So please, Andrea, for the key takeaways, the last slide is yours.
Yes, thank you, Els. It was very difficult to summarize in one slide the key takeaways when there's so much information over there and so many standards developed and being developed. But we try to find some key sentences about standards. So standards are the common language among the main actors in this field, the financial sector, businesses, and policy makers. So it's very important to bear this in mind when you're using standards. And standards are excellent tools in measuring the impact of the policies, also European policies and international policies, and ensuring that investments are directed towards sustainable growth. And the performance standards provide tools for measuring the results generated for the financial value chain, while de-risking the application of the legal requirements. And obviously, there's a need for more standards, as it was said to you by the speakers before, to support sustainable finance. And a lot of good and well-established practices are already available. It should be standardized. Next slide. So, as Ettore said, if you would like to join the standardization work in this field, just contact me anytime. Here you can see my email. So, Els, the floor is back to you.
Yes, I saw someone already pointing out his interest in joining this work. So yes, please get in contact with Andrea so that we can speed up the process, I would say. Now, I would like to take the final slide and just thank all the participants for their attendance and also, of course, the speakers of today. Thank you very much, Andrea, Franz, Ettore, and Bettina for these excellent presentations. We will also share today with you the presentation and the link to the recording, so you can start sharing it with whoever might be interested in listening this presentation. So please stay tuned for our next webinar. It will be on the 10th of May. We have a 10-10 webinar on the lessons learned for Sensenelec from the COVID-19 crisis. So might be interesting for you as well to follow. The hyperlink is in this presentation, so please feel free to click through and register right away. Thank you very much, everybody, and have a nice day. Bye-bye.
Thank you.
Thank you all.
Thank you.
Thank you.